I was hoping that my vice chair might have just arrived, but unfortunately she's not here yet. But she's, I'm sure if she's coming, she'll come at some point. Well, a warm welcome to this meeting on the 19th of March. First of all, can I have apologies, please?
Thank you, Chair. I've received apologies from Councillor Salisbury, Councillor Afsar, Councillor Huckfield and Councillor Sweeney.
Right. Declaration of interest from anybody? I know we're all interested because we're all here. I'd like just to welcome a member of the public there, Mr. Reid. I think he's become a regular now at our meetings, so a warm welcome. And we've also got somebody, a lady, who's come to observe us. She's, what's that pronounced? Nisha Gupta. She's in the private section, but she's come to observe the way things go in the first part. A warm welcome anyway. So that brings us to the minutes of the meeting held on the 20th of February. Can someone approve them as a correct record, please? Graham? Seconded by Keith. Everyone's okay with that? Right, that brings us to the important parts now. Agenda item 4, the external audit situation, outstanding accounts, future arrangements, consultation. That's over to Rachel Spain. Rachel, it's all yours.
Thank you. Good morning, everyone. So I'm just proposing to give a short update on the current situation with external audit, just picking up on a few points that Hassan mentioned at the last committee meeting, and just to clarify the situation regarding a couple of consultations. So we have had a consultation which was issued by DLUC and other bodies at the same time. That closed at the beginning of March, so that consultation has taken place and has happened, and we're waiting for the outcome of that to be published. The proposal is that there are 3 phases to address the audit backlog nationally. So phase 1 is a reset phase where outstanding audits up to the financial year 22-23 are addressed. Phase 2 is a recovery phase where in the years, including the current year 23-24 and future years, we make progress in terms of deadlines and timeliness of audits. Phase 3 is reform, where there are some changes to address the systemic challenges in the local audit system. And those sort of phases would obviously happen in chronological order. So phase 1 is reset, and that includes some backstop dates. So for the County Council, we've recently signed off the 2021 accounts, but obviously we have draft accounts still for the years 21-22 and 22-23. And the proposal is that they would need to be signed off by the backstop date of the 30th of September this year, 2024. And the means by which they would be signed off, because there isn't time between now and the 30th of September for full audit to take place for both of those years. So the proposal is that there would be modified or disclaimer opinions issued by EY, who are the auditors for those financial years. And that was confirmed by Hassan at the last committee meeting. He said the intention is to issue those disclaimer opinions. At the moment, there's no set wording published for the disclaimer opinions, so we don't know what form that opinion would take and how that would look on paper. But that's the proposal. They would still need to do some work on the value for money conclusion, and there would still need to be an annual audit report brought to this committee for both those years, including some kind of a conclusion on the value for money position. And again, that backstop date of the 30th of September applies to that annual report and the VFM opinion as well. So should everything go through on the basis of this consultation, that's what we could expect to see coming forward to committee by the 30th of September. So a couple of reports from EY and some opinions on the value for money. then to go forward into the recovery phase, so from the current financial year, 23-24, we have new auditors, as you're aware, and we have Richard from KPMG with us today to introduce himself to members. So from this year, there's also some backstop dates proposed, so that over a period of 4 years, we gradually get the audits completed quicker and quicker, essentially, so that by the 26-27 accounts, we're back to having audits completed by the 30th of November. So that's the proposal, that over a period of some time, we sort of get quicker and quicker and get back to a normal timescale for audits. So the risk there, I think, for us, for the County Council, I think the risk is that the draft accounts for 21-22 and 22-23 are not going to be thoroughly audited as we've been used to. So there is a risk that there are errors contained within those accounts that are then not spotted. There's equally a risk that there are no errors whatsoever in those accounts, but we have to receive disclaimer opinions for those years. And then obviously there's a risk that going forward with the backstop dates that creep gradually quicker and quicker, that they might not be achieved for some reason, and obviously that the audit backlog therefore is maintained and is not sort of resolved over that period of time. The hope would be that that's not the case, because phase 3 of the consultation around reforms should help to address that situation more widely in terms of auditor resources, and I'm sure Richard will have some further information on that and a view on how that might work out in the future. There's one other piece of consultation that's out at the moment, published at the moment, with a deadline of next week for comments. So SIPFA have proposed a couple of changes to the Code of Practice, which are quite minor, very technical in nature. So a couple of options in terms of simplifying the measurement of our property, plant and equipment, and using a specified indexation for those properties that are not valued by the qualified valuer each year, and also just some reduced disclosures for the pensions reporting. So 2 really technical areas which would reduce the workload slightly for us in terms of preparing the accounts, and would reduce the workload for the auditors because there's less for them to check in terms of disclosures. That's proposed to just exist for the current year, 23-24, and next year's accounts only, so it's not proposed to last for a long period of time, just those 2 years. It's kind of just to give everybody a little bit of breathing space to try to catch up, essentially. And those 2 areas, very technical and quite low risk in terms of the interest around an authority's value for money position. Those 2 measures would not have any impact on that at all. So we're in support of those 2 measures and will respond to the consultation accordingly. So that's the situation currently. So hopefully that does clarify things for members, but happy to take any questions if there are any.
Graham?
Thank you. I'm more than happy with the arrangements that you've suggested for the accounts that haven't been signed off. But when it comes to the future arrangements, I believe that one of the reasons we've got behind on the other accounts is the capacity of the auditors to take on the work. And that's been quite obvious from the questions that we've asked a number of times about capacity and not getting an answer at all. It's been pushed to one side. So really, my question is for Richard. Do KPMG have the capacity over the next 4 years to get us back on track? Thank you.
On the next agenda item, so we'll leave that to then, if you don't mind, Graham. Carol, Janice?
Thank you, Chair. Yeah, I think everybody appreciates the position that the industry is in, let alone us as a county council. I think when the disclaimer is available, I'm assuming that that's going to be able to come back as well, and we'll be finding out what that is, because I would anticipate that some of that process has already been undertaken, especially for the more historical pieces. So I would like to think that there would be less risk in some of those as well, because more of that work has been undertaken. I think one of the questions that I'd be interested in to see as well is what sort of transition process now between where we're at and what is being picked up by KPMG would be something I'd be keen to look at either in this session or in the next agenda item. But just in terms of the risk, we know that there has been errors that have been picked up previously. So whilst we might be a little bit more certain about those that have had more work put into them than others, as far as the years, that we've got a good idea, I would hope, as to what there have been historically. But I think it might be worthwhile just going back over, you know, from sort of recollection now as to what those errors were. Because I think that some of them did go back into the property side of things and the asset values, which is what SIPFA, as I understand it, you've just mentioned, are looking at making those changes onto government practice. So how we can try and cover that in the best way that we can, knowing that we're also in a position whereby we've got a set period of time that we do need to try and catch up. So we're being able to deliver that, that certainty as much as what we can for the forthcoming years.
Yes, understood and agreed. And I think where errors have been picked up in previous years, where any error, not just relating to property, plant and equipment, but any error, we always then follow that through and don't make the same mistake again in future years. We change our processes to ensure that things are accounted for correctly when an error is found. The area of fixed assets and the valuations has been an area of intense audit scrutiny in recent years, and also some technical changes, for example, the infrastructure issue, which sort of held us up for 2021. So the changes to the infrastructure assets, they have been carried forward into the next few years, but appreciate the comment and we'll bear that in mind. Thank you.
Just to add a little bit to that, EY never ever met with us, didn't do a lot that we asked, but straight away already the chair and myself has met with Richard. We've been introduced to some of the team, they've given us a clear pathway. I think it will go smooth, is my personal opinion.
I think we've got a very unsavoury situation we're faced with, but unfortunately it is where we are. And so I think we need to move on now. And like I say, I think we'll move on to the next agenda item. And over to you, Richard. And then what?
The next agenda.
Oh, did you want to say something, Keith? I'm blocking you. I told you to keep quiet today. Go on, Keith. Sorry.
Thank you, Chair. Yeah, I don't know. I have done. Yeah, I mean, for me, I think I'm a little disappointed in the fact that it's going to take us 3 years to get everything level on the level cricket pitch again, which I'm slightly concerned about. Obviously, as I say, I think the capacity issue is something that might be more realistic we could come on to. But for myself personally, I was hoping that we would be able to do it slightly quicker than that, I must say. With regard to the disclaimers on the 2 years of accounts 21-22 and 22-23, does that change our legal basis on which the audits are being done and our responsibilities towards having to do that audit and to the standards that are required? So that's number one. And then you mentioned the fact that we're going through the 3 phases. One thing I would assume is that the reform phase is something that we are currently doing, if that makes sense, for the 23-24 accounts. If not, I don't quite understand why not, if those alterations have already occurring and therefore they should be applicable for the current financial year. Do those 2 questions make sense? Thank you.
So I'll start with the first question. So the disclaimer, there's going to be, should the consultation be accepted and the proposal be accepted, there will be a change in legislation just to allow these disclaimer opinions to be officially recognised, and the Director of Finance would still be able to sign off the accounts and certify that, in his opinion, they demonstrate a true and fair view of the financial situation of the County Council. So that won't change, and so whatever the wording is of the disclaimer opinions, they'll still be brought towards, to the committee for approval from members, but they will have the same legal standing as a non-qualified opinion. Qualified opinions can still be issued during this period, so if an auditor was to find something fundamental with an authority's accounts, they can still issue a qualified opinion if they choose to. Question 2 about the reform phase. This is intended to address some of the capacity issues in audit firms that have been mentioned. So I think Richard probably has a better idea than I do about what's happening regarding auditor capacity currently. But the idea of this phase 3 is that it's addressed nationally, so it's something that the PSAA is taking the lead on in terms of working with the audit firms on how to address the capacity issues. I think, again, Richard will have a view, but in terms of training new recruits up to be auditors, that can take a year or a couple of years. So I think that's why it might take a little bit of time to get new recruits in and up to speed. 23-24 is part of the recovery phase, but the reform phase is overarching, so it does cut across all years. Yeah.
Right, we will move on to you now, Richard. It's your turn.
Thank you. So
Introduce yourself.
I've managed to get my mic on, which is the first hurdle cleared. So my name's Richard Lee. I'm a director at KPMG. I'm delighted to be here at my first committee, my first face-to-face committee, actually returning to local government after a period away. So, as I said, I'm a director. I will be responsible for the audit of both the County Council's accounts and also the pension fund's accounts going forward from this point. So a bit of background, I've worked at KPMG now for 20 years. Throughout that time, local government was really very much the foundation of the work that we did for many years. I was brought up working in local authorities. I'm CIPFA qualified, and that's the case for many of the team as well that I work with. So from an experience perspective, it's great to be back and working in this environment. Supporting me and the team will be a number of qualified accountants as well. So Rachel and Internal Audit will have met with a number of those already. And again, in terms of experience, we've got the right team. So as I said, we're delighted to be back working in this market. The last time we did local authority accounts was the 17-18 year. We've had a period away, and obviously things have changed significantly during that time. But we're really pleased to be back. And from a kind of delivery perspective, local government forms a really important part of our business. So we are a public sector audit function. I'm based in Manchester, but the North practice spans Manchester, Leeds, Liverpool, all the way up to Scotland. And we audit health trusts, the ICBs, housing associations and housing groups, education bodies, so colleges, universities, and we do quite a significant chunk of National Audit Office, central government work as well. So during the last few years, the bit that's really been missing in terms of that public sector practice has been local government. So from our perspective, it was a really important decision for us to make sure that we're back in this market. However, to address Councillor's point in terms of capacity, clearly to enable us to return to the market, we've had to make sure that we do have the right capacity. So during the intervening period, we've made some business decisions to exit work to make sure that we have the right people in the right place at the right time. And the decision to re-enter the market has been scrutinised significantly right the way up the business within KPMG to make sure that we are equipped to make sure that we can deliver to the new timetables. And through the procurement process that was run by PSAA, that was very much an important thread that we had to demonstrate in terms of being able to make sure that that we had the capacity to deliver. And it's not just about having auditors available. For me, it's very much around making sure that we've got continuity within our audit team so that they can build relationships with your team, and to make sure that, you know, as we kind of work through the next few years, that our team can learn that from you, learn about your organisation, and then make sure that we can, you know, use that experience to make sure that the audits run as smoothly as possible. And, you know, rewinding a few years, we were in a position where we were signing off the vast majority of our audits by the end of July. So clearly that's, you know, we've an aspiration, maybe not to return quite to that, those levels of stresses, but and that very early deadline, but, you know, to make sure that we get back on track in terms of a delivery timetable. So our responsibilities in terms of what we're going to be signing off, we'll sign off the financial statements of the authority once all of that work is complete, and we'll also be responsible for issuing a full scope value for money commentary. It's not a conclusion anymore, it's a commentary under the latest version of the standards, and that covers our the arrangements around financial sustainability, around governance at the authority, and also the final domains called the 3E, so economy, efficiency, effectiveness in the use of resources. So for KPMG, that will be a full scope piece of work, whereas EY's responsibilities are to bring the value for money position up to date, I think by the end of September, in line with their backstop responsibilities. So that will be one report that should cover all of those intervening periods. Ours will be for the 12-month period from 1st of April to 31st of March 24. And as I said, I've also got the responsibility of signing off the pension fund as well. So in terms of the process to date, we've been working very closely to get to know responsible people at the officers at the authority. As the Vice Chair said, we've had meeting with the committee, we've met with internal audit, we've met with Rob, Section 151 officers, and also we're working through the process of developing our understanding of systems and processes, probably driving the finance team mad with various requests for information. But, you know, that's really very much around our kind of commitment to try and make sure that we're in the right place at the right time in terms of the progress that we're making. So in terms of deliverables, it's our aspiration to, you know, we're committed to bringing an audit plan through to the next audit committee. So we expect that to cover all of the work that we'll have done to date on the financial statements of the authority and the fund, and ideally it will include our value for money risk assessment as well. So that will be the first formal deliverable that you get from KPMG. And then after that we then move into the year-end work, but clearly that's where this dependency on the predecessor auditors really kicks in for the first time. We're okay to do all of our work around planning and risk assessment whilst your existing audits remain outstanding, ongoing, but then we just need to work through, depending on where they get to, what that means for the timetable moving forward. But it's our expectation at this moment in time that we will commence our year-end testing for the 23-24 audit in July 2024, with a view to navigating our way through the year-end process and reporting as soon as possible after that. One of the points around the consultation is how that backstop date is implemented, and from a KPMG perspective and a risk perspective, we just need to make sure that we are comfortable potentially starting our year-end work whilst EY's previous work remains outstanding, but I think we're confident that we can commence that year-end testing, and that will be of the full audit. So it will be our expectations that management support the draft financial statements that will be presented to you with detailed working papers. We'll issue what we call prepared by management lists, where we expect management to provide us evidence to support transactions through the period and explanations, not only from a financial statements perspective, but also from a value for money perspective, if there's anything that comes to light between the risk assessment work that we'll have done and the potential sign-off dates. And I think to date that seems to be working well in terms of the interactions that we've had. Rachel's probably a better person to answer that than me, but certainly it feels like we've hit the ground running and we're getting the right level of engagement with the team. The point around modifications of opinions and how that will flow through into the future. So it's likely that you'll get modified opinions from EY for the up to 2023 year end. Consequently, that means that our opinion will also be modified when we come to opin it and disclaimed to an extent, because we won't have the assurances over the opening balances. It also means that the subsequent I think it's three audits will also be disclaimed or modified to an extent, which is unfortunate, but that's just the way it flows through whilst we rebuild that assurance. You know, we have to have something to anchor to in a set of financial statements. The balance sheet has to be fixed, and whilst you have unaudited opening balances, that flows through. It impacts the I&E account every year and also the comparative numbers in the financial statements. But as Rachel explained, that the expectation is that as we work through those backstop dates, you'll get those disclaimers, and those modifications will naturally erode. But that's not to say that we won't report on a timely basis through that period. So at every point you'll get reporting from KPMG, you'll get signed financial statements and opinions, and obviously save for any elector challenge issues that we're responsible for dealing with as well. We'll be aiming to certify the accounts and close those out on a timely basis as well. So I think I've probably covered where we're up to date and what why we're back. The next steps are very much moving into to bring through to this committee the audit plan, which you'll have an opportunity to review and obviously challenge us around. That will set out the audit risks. I wouldn't expect that our risk profile is going to be massively different to probably what you've experienced in the past. We very much focus on judgmental aspects, so things like the valuation of the pension scheme, the valuation of assets, and then we have a number of sort of statutory risk areas which are around management override and consideration of revenue and expenses. We'll work to a materiality level. We already know that we expect that to be in the region of, our headline materiality level will be in the region of 25 million for the authority, about 66 million for the pension fund, but we'll work to much lower levels of materiality in terms of execution. But this will all be set out in the audit plan for you to scrutinise. And then once that's presented, our attention will turn to that year-end position and very much making sure that we deliver on a timely basis.
Okay, thanks for that, Richard.
Thank you. Thank you, Richard. That was a really detailed, comprehensive report and a good start of a 10, as they say. One thing I get a real feel for is the importance. I think you made reference to continuity, but continuity and consistency are key in this environment, and I hope you would agree with that. And I think that's something that we'll be looking for. But from a practical, trying to shake down everything you've said, but from a practical point of view, have you been able to identify a demonstrable milestone for the next 12 months to reflect what I might call, if I may, a smooth transition around the scope that you've described? I'm looking for something that I can lock into to see how you're going to go about that and think, well, I'm going to throw that back at him each time I see him. Thank you.
I think the audit plan document that you get through to the next audit committee should set out and should meet your the point that you're making there. So we haven't engaged directly with EY, but I think because we've been told by the PSAA that we shouldn't be doing that at the moment, but we have been working very closely with the finance team, and really that's what drives our understanding. And then you will have that audit plan at the next committee meeting, and that will set out how we're going to deliver the audit, what we see as being the risk areas, and they are the points at which we will then subsequently report to you. So I think the audit plan is the document that you're looking for.
Firstly, Richard, welcome. Welcome to this committee. You bring a smile to my face straight away. We've had a very frustrating time with EY, purely because the finance wasn't there for them to employ enough. So my issue going forward isn't you and your team. I'm absolutely happy and comfortable with what you're doing so far. Can't wait to see the audit plan as well and follow that smooth transition that I'm absolutely expecting. Mine will be, as time goes on, the money aspect. That's where I'll be watching you closely to see that things aren't moving up and the costs aren't spiralling out of control. So could you give me a little bit of confidence that what you will be looking at is roughly within the scope of what you are going to be paid for?
Thank you. Yes, so our in terms of the fees, our fees are set, or the fees that you pay are set by the Public Sector Audit Appointments Limited. The scale fees, I think, are on the PSAA's website, so they are publicly available. Those fees don't include currently one aspect, which is for the implementation or the audit impact of implementing an audit standard called ISA 315, which was a planning and risk assessment change to the audit process. So that will be on top of the scale fee, but that's something that all local authorities will experience, and it will flow through a fee variation process, which will be monitored by PSAA. So that's the one aspect that's not in that scale fee. And then the other aspects that aren't in that scale fee are where we have any variations to our scope. So, for example, if there was an emerging issue that came out of left field that we just that nobody had an idea around and required specific audit focus, that would be something that we would discuss with the finance team, the audit impact. We have to give very early, our contractual arrangements require us to flag that very early. And then as we work through the process, we would monitor that position, the amount of time that it takes us. And there's a mechanism in place that's been put in place by PSAA to record that impact and then convert it into a financial position. But as I said, I would expect that if that were to occur, you'd be informed at the earliest opportunity. The other aspect would be for any elector challenge arrangement. So if you have electors who want to raise a complaint about or link to the financial statements, which falls within our remit, and we have to do work over that, then clearly that has a fee implication as well.
I want to say something, Janice. Before I finish, I'd just like to say I am looking forward to seeing the audit plan, because we've been in the wilderness for quite some time now, so I look forward to that, Richard. Janice?
Thank you. Yeah, and I think I too, obviously keen to see that particular part going forward. Can I just ask for a bit more information? You mentioned about the commentary that you're going to be providing in conjunction with EY, is that right? So you're going to be putting together a commentary on certain elements of it, and then EY will also have their aspects for value for money. Did I understand that correctly? So, because that's what I'm quite keen to see as to, when you transfer bodies in such a way, you'd have a professional clearance sort of phase, because I'd be interested to see if there's any discrepancies that you'd want to see, although I understand that the modified opinion applies to both yourself and KPMG, picking up, for example, opening balances and things like that. So if there were anything to come out, you have opportunity there to make a note as well. So just a bit more detail on that. Thank you, Richard.
Okay, so picking up the value for money piece first. So EY will be responsible for all of the reporting up to 2023, so up to March 23. They have to issue a commentary on the position up to there, and that draws a line in the sand at that point in time. So their report will probably come through to this committee in due course, I would imagine, once they've, and that's historical, looking backwards quite a long way. Our responsibility will be for the period from the 1st of April 2023 to the end of 2024, so just that 1 year. So whilst they're separate periods that are covered, clearly what we need to make sure that we do is we're aware of anything that they report, so that we don't we ideally don't contradict them, but you know, that our reporting is cognizant of their findings, which you'd expect to be grounded in fact and evidence. So they are separate periods, but clearly we need to be mindful of their findings around value for money, but it will be based on our own approach to addressing the value for money arrangements. In terms of financial statements, again, we're covering from the 1st of April, but as part of the transition period, I would expect that we will review the work that they've completed, but clearly they won't have done a huge amount over some of those earlier periods. So there will be a transition arrangement, but I don't expect we'll take a huge amount of assurance from their work, just purely because they haven't done very much work around those accounts for recent periods.
Following on, I took my thunder as normal, but yeah, I'm slightly confused. So will EY be having their own audit plan for the past accounts, and you'll have an audit plan for your work starting on the 1st of April, or who will be in charge of putting a combined audit plan together? Or am I missing the point here?
So EY, I think, EY are basically drawing a line in the sand at the end of September to cover the work up to end of March 2023. So I don't know whether they presented an audit plan or what came through for those committees. So they're just disclaiming. They are most likely to disclaim that position, and that draws that line in the sand. The audit plan that you'll receive for us is as if it were business as usual for the 1st of April 2023 through to 31st of March 24 year. And the reporting that we issue is at the right time. You know, if we were in any normal year, we would expect to be issuing our audit plans around this time for a March year end.
So you mentioned it already in terms of any alterations and things that they might conclude within their two sets of accounts. We've got to come back to, I assume they've got to come back to this committee for final sign-off. I just wondered, will that impact on your audit plan if they haven't quite done what they said they were going to do at certain times? Is that included within your work that you have to do to be able to then give us an audit plan yourself? And in terms of value for money and all these other things that we've been talking about, will their work have that much impact or not? I know that's what the disclaimers are for, but it just seems a little bit awkward still. I don't know, but anyway, still a bit uneasy.
No, you're absolutely right. It is unusual, unprecedented, let's say. Yeah. So yes, absolutely. In an ordinary situation, it does impact our opening balances work. You know, that if you work through some of the proposals, what they've talked about is a phasing. We simply can't audit the opening position and the closing position all in one go. The amount of effort that would be required, because it's not just the opening position, it's the opening position, and actually the opening position. So the disclaimer basically enables us to move forwards. We will anchor to certain things in your accounts that we can. So, for example, we'll be able to write to the banks or funders and say what was the position, not only at the year end, but also at the beginning of the year. So that'll allow, over time, we will do a range of procedures to rebuild the anchor points within your financial statements. But it is unusual, it is unprecedented. What you'll get from us is an opinion that covers your accounts up to the end of March 2024. But as I said, it will be disclaimed in certain aspects. But you'll move forwards with timely audit being delivered at the right, per a traditional cycle.
No,
Keith.
leave it, Keith. Caroline's coming back
Let me
to you.
try and explain it in very simple terms. At our last meeting, if you remember, I asked which route EY was going to go down, and they said the disclaimer. That means they don't do the work. So our own internal audit have done the work, but it's not double checked, so that's why it's called a disclaimer. Yeah. So we can draw a line on that 2024 and let them start. Yeah.
September 30th, so it's still part of this committee's meeting until that date.
Yes.
That's the point I'm trying to make.
Still a disclaimer.
So there still needs to be some input from the committee in terms of its timetable.
Committee,
And,
yes.
and obviously that's extra work for the committee to some extent in the fact that we've had 8 meetings this year when we normally only have 6. So, you
Well,
know,
that's not a big deal.
You know, but
To
Yes, thank you,
agenda
Charlie.
item 6. Review of the effectiveness of the audit committee standards. So with you, Lisa. Thank you.
Thank you, Chairman. So the paper before you is really following on from all the work that we've done in relation to reviewing the effectiveness of the Audit and Standards Committee. So this is the proposed training schedule which is being produced as a result of the assessments and the information that members requested to be included. So on page 15 of the report pack, you've got the proposed breakdown of areas of coverage of each particular workshop. I was trying to get that into 2 sessions, but I think in order to be able to give you the detail that you requested, it's better to have 3-hour sessions, and we'll break them up and have a break in between. There'll be a workshop format, so we'll follow along the ways that we did the actual assessment workshop itself as well. The first one looks at more governance-related activities, looks in more detail regarding the annual governance statement and the importance of that particular document when assessing the overarching governance arrangements within the organisation. How that all dovetails into the terms of reference of the Audit and Standards Committee, and then links through to the County Council's financial management arrangements and the role of the Chief Financial Officer in local government. So it's to give you that additional information as requested on those areas. Workshop 2 looks at internal and external audit, looking at counter-fraud, whistleblowing arrangements. So to give you that detail. Specific information was requested in relation to what public sector standards, internal audit standards were about, and we'll probably go into more detail regarding those. Workshop 3 picks up a risk management aspect, looking at the risk maturity and key areas for improvements of the key risks of the County Council, and having a look at some of the current risk registers that are in process at the moment, and then link that through to the core skills, because everybody did a self-assessment, so we've picked up some key themes and we'll bring those through as well, and also just to have a recap. Now these are workshops. They're very much drop in, and we have some proposed dates in June, July and October this year. So I'd really recommend that we go along on that format. In addition, I did ponder, and was picked up by Carolyn Trowbridge as well, is that we perhaps need to think about moving us into a digital age as well. So capturing this information for future audit committees and future new members to any committee moving forward. So we'll look to potentially digitalise that moving forward. But it probably needs to have a bit of a blended approach as well. But that was an idea that we would take it forward. So probably use the material this time and then look to digitalising it moving forward. So happy to take any questions, and I'd really recommend that we take this approach forward. Thank you, Chairman.
Okay.
yeah, it was thanks very much. I think it all makes sense as far as I can see from all the workshops and everything that we've done so far. Bit disappointed we've got 3 workshops to do instead of 2, but there you go. That's the way the cookie crumbles. The only question I have is, are we going to open it up to other non-committee members if they want to find out a bit more about what we do? And we want to be open and transparent, I think, in the processes that we're meant to be doing at the moment within the audit. I don't see any reason why we shouldn't open it up to all the other members as well, just for them to be able to do this. And it might even be that well, they might run screaming in the opposite direction. So they probably will.
Thank you. I'm fully conversant with this. I think it's great. I really enjoy the workshops. This committee is not my natural home. Far from it. But you're appointed, so you do your very best, don't you? And can I just, while I'm on, Richard, your summary was absolutely great, and I really enjoyed that. But two things. Are the dates in the diary? These are very practical questions. Are the dates in the diaries? Because you're talking about June and stuff like that, holidays, and so we get them in the diary. And secondly, I fundamentally disagree with Keith. I don't think we need to open it up. I think we're appointed as scrutiny members, and that's who we are. So my apologies, Councillor, but it's good to have disagreement, albeit friendly one. Thank you, Chair.
Yeah, but my only thought on that debate in between the two of you gentlemen there is that there's obviously a lot of effort going to go into preparing these workshops, and I would like to be able to make sure that the attendance justifies the amount of effort that's going into them. Absolutely. So not just with the people who are here today or who have sent apologies from this specific committee, but from the wider council membership as well. I would be loath for a lot of effort to go into putting on workshops for not many people to attend.
Graham.
Can I just say that the workshop should be commensurate with the skill level of the people attending. I have no intention of attending a workshop which is on basic finance. Thank you.
Right, well, obviously we've got a recommendation that we adopt this procedure, so can someone approve that for me?
Yes. Absolutely.
Everyone's happy with the proposals? Thank you.
Yep.
Thank you very much. Right, we're back to you, Lisa. Agenda item 7, the forward plan for the Audit and Standards Committee. Back to you, Lisa.
Thank you, Chairman. Before you have the normal forward plan with details of the agenda items for the April committee meeting, the forward plan is in the process of being updated for the next civic year. We've got the draft meeting dates contained within there, and I'll flesh that out with the standing items as and when they come forward and get greater clarity in respect of the external audit agenda as well. So happy to take any questions or have any additional items considered for inclusion within the forward plan. Thank you.
Right. Thank you. You happy with that? So, right, it comes to the shut down the recording now, I'm afraid. So I'll just read what I have to read. That the public be excluded from the meeting for the following items of business which involve the likely disclosure of exempt information as defined in the paragraphs of Part 1 of Schedule 12A as amended of the Local Government Act 1972 as indicated below.